in the listing game at all, you probably had a ton of clients coming out of 2024 saying, in the new year, we're going to list our house. When it comes to spring, we're going to list our house. The amount of agents that started telling me, man, my hot list is blowing up. I'm going to have the biggest spring I've ever had. I'm like, this is not an accident. Like, this is people trying to fix debt, and they've waited a little bit longer to move, and they're ready to go. Welcome back to Life at 10 Tenths, where we inspire you to live at the pinnacle of your ability and purpose. Garrett Fry here with my friend Matt Benelli, and we are going to pontificate with you for a little while today. Matt and I, we talk a lot on the side. People are like, oh my gosh, you guys talk more.
Our only relationship is actually on the podcast that's recorded. I don't even really know what Garrett does unless we're recording a podcast.
the 5 phone calls a day. So we were talking about just things we're seeing, and this is the interesting part. Like we are around so many people on a day-to-day basis. Matt's around a ton of people. I'm around a ton of people. Most of us are talking real estate. We're talking about what we're seeing with our clients, what we're seeing in the energy in the world around us. And one of the things that's kept coming up for me, Matt, and we've been talking about this, is this energy where people are accumulating some debt right now. Since 2020, I've been tracking this, and we've been kind of watching the debt numbers grow as credit card debt is incurring, and vehicle debt, like actual purchases that people are making that they're like, you know what, I'll take the payment on it. It's going to be higher than I want to do, but you know what, let's do this right now. Seems like the right thing to do. These things are starting to, what I'm kind of watching in people's worlds, catch up with some people. Now, this is the interesting thing about our conversation today, is that this is not hard, fact-based conversation that you're going to experience with Matt and I. This is Matt and I's thoughts and what we're seeing and what we're starting to see and where I think this is going to go and what I think is going to happen. I don't necessarily like making predictions because I find that we can predict the future all we want, and it's just kind of like, we'll see kind of really what happens here. But there are some little signs that I am watching that it's making me stop and go, we need to pay attention to this. And so, Matt, morning, sir.
Good morning to you, man. I'm excited to talk about this. One, because you brought this up in the conversation. I'm like, that's interesting because I'm not seeing that happen from a numbers perspective, but I could see it being a thought that's going on inside people's minds, right? And which is really what drives what a lot of people do with real estate. Because anytime we start to talk numbers, Garrett, and we're going to talk about mortgage rates here, sort of a little bit, that's an element to this conversation, is everybody puts things in a silo. They think, okay, mortgage and housing, we're just going to put that right there. Whatever's going on with their credit card debt, their cars, and all that stuff, that doesn't matter. That doesn't impact the decisions that they're making on what they want their monthly payment to be here. It's just the mortgage rate, the insurance, and the home price, right? Yep. It's like, well, there's these other things going on because no one would ever give up, Garrett, a 3% mortgage rate, right? Like, why would you ever give that up? Well, if you're carrying a lot of 22% credit card debt, you might.
There's a certain place in there that it's like, let's make an educated decision about like what is going to be the best thing to do with our finances here. I really love our 3% rate, but look at what we're doing over here on this side. So there's another element. And so before we go down that route, before we do that, I want to throw one more thing into the mix here. We came out of 2020. There was a pandemic. I think all of you are aware of that. Remember that? It feels like it was forever ago that we were all standing around in our houses going, we can't leave. We're stuck here. Like, it feels like forever ago, but it actually really wasn't that long ago.
I was going through handwritten notes, by the way, Garrett. Total side comment because you brought up 2020. And I was going through a whole box. I was cleaning out my office to kick off this year, which is lovely because now I can see my floor. And I was going through all these notes, and there were a good handful of notes from 2020 of people writing you and I notes about like, oh, thank you for the podcast. It's keeping me, sane during this time where I have to be at home and all this stuff. And I was like, oh man, like that was kind of fun. Not thinking about 2020, but seeing the gratitude in the notes that people wrote us from that time frame. So anyway,
I have a box behind me. I think it's great that you just said I can finally see my floor. Matt gets so many handwritten notes he could not see his floor. He had to pick them all up. I hear what you're saying, dude. I don't get that many. I don't get as many as you, but I got a little box behind me.
Yeah.
So you go to 2020, and what 2020 caused was a massive life change, a massive stressor on people. And what it did is it made them take life changes that would have made them wait longer. They probably would have lived with it a little bit. And they went, well, hell, if my kid's not going back to school, why wait till they graduate for us to go move and get to the place that we want to be? Like, let's go now. That we're not keeping them here now because they're friends and they're in classes and all this stuff. Like, that ain't going to happen if we're going the direction that we're going. I don't see schools going back in, so let's move now. What happened was we had all these people that like pushed their move dates forward. We had a massive amount of people move through the industry, through the pipeline, and everyone was walking around going, oh my gosh, real estate deals are falling from the sky. Then flash forward to 2024 and to 2023, and everybody's going, whoa, it's really quiet out here. Like, there's not a whole lot of deals going through. Things are kind of holding right now. It must be the interest rates. Nobody wants to give up their interest rate. No, it's not what happened. We had so many people move earlier than they normally would have that they're all basically sitting in this kind of dead zone in here, kind of going like, yeah, we already moved. We would have moved in 2024, but we moved in 2022 or 2021 because we got pushed to do it a little earlier than our normal cycle. Now we have this dead zone in here. We have people sitting. We also have people accumulating debt. So what we have, Matt, is this is what I've been watching is this kind of weird little perfect storm where now we have people that do need to move. They've been hanging on to their lower interest rate and kind of sitting in this zone in here. And now that they have the debt, they're going, you know what? I love my low interest rate. It's very nice, but I need to free up some of this cash. And if we're going to refinance to pull some of this cash out, why not move? Like, I'm not holding on to this low interest rate to hold on to this house right now. Like, I'm making a change. We're going to pull some cash out. This house has done its thing for us because I think now we've watched some people hang on to their homes longer than they normally would have. 2024, I think people kind of went like, let's just see what's going to happen. Let's just wait. Let's just see where we're at. We're at the other side of that swing. And I think people are ready to go. I think that's why if you're listening to this right now and you are in the listing game at all, you probably had a ton of clients coming out of 2024 saying, in the new year, we're going to list our house. When it comes to spring, we're going to list our house. The amount of agents that started telling me, man, my hot list is blowing up. I'm going to have the biggest spring I've ever had. I'm like, this is not an accident. Like, this is people trying to fix debt, and they've waited a little bit longer to move, and they're ready to go.
Well, I agree with that. And I think whether the debt component plays into the increased volume or not is going to be interesting to see how that plays out. But I do think that exists. I mean, we talked about it just a few episodes ago about the rising debt, and the charts are starting to tilt vertical, which is a little scary, right? In a way. And I also think that people are starting to get comfortable with like, okay, I am not going to pay attention to predictions because they said it was going to be 5.5 last summer. Well, it never even got close to a 5 handle. It barely even got close to below 6.5. And now we're starting the year at over 7. So it's like, well, and these are mortgage rates, by the way. It's like, so why wait on a rate for me to solve some of these issues? Also, this is total anecdotal data too, Garrett, is I have heard a lot more people talking about job changes. And maybe it's because it's the turn of the year, but I wasn't hearing this much conversation about it over the past few years. And maybe that was because of leftover pandemic stuff and really hardcore remote work kind of just going on. And now companies really want people back in, but I'm having conversations with just friends locally and hearing other people and looking on my LinkedIn to see a lot of job changes, and not like simple, like I got a new title that happens, but hey, I took a new job. My wife just took a new job. which was a total surprise. Like companies are recruiting, and it's not that. So you have people who are seeking out new adventures for themselves, new opportunities, but also companies are getting aggressive with recruiting because they want the right talent. And so they're willing to pull people and pay people to move. Even if it is a work from home, but there's a travel component kind of built into it. And I think that's going to absolutely affect what people do with real estate. And if they have any type of credit card debt, they're like, well, if we make a move, our mortgage might go up a little bit per month, but we won't have this massive interest payment that's coming in. We'll know, we're predictive, because when people do, and this is a weird kind of psychology thing, this is kind of how at least I operate when it comes to my money, is the one thing I never want to miss is that mortgage payment. Like if everything got burned to the ground from a financial picture, like I'm going to make sure that mortgage payment is paid because I'm not losing this house. That's coming well before taxes get paid, by the way, except for property taxes. Property taxes are part of the mortgage payment, right? It's like and I think people look at it that way. So if they're lumping things on the mortgage payment, they're like, I'm going to do whatever it takes to make sure that gets paid. Credit card debt, yeah, sure. Car payment, if the repo man shows up, it is what it is. IRS, I mean, come on, they don't really have the personnel to come after me, do they? By the way, if you're listening, I know that you have the personnel to come after me. My taxes are paid and we're all good. Don't worry.
Matt's red flags are just being pinned all over his name out there.
Yeah. They're like, hey, this guy on this podcast.
Well, we heard an episode.
So I think people are comfortable wrapping things into their mortgage, whether that's through a refinance or a home equity line of credit or something like that. And this gets into, Garrett, okay, well, what do we do with this information? If this is potentially happening, if we're running into this weird kind of cash flow crisis, is which I'll call it, not a debt crisis, but a cash flow crisis for some people because they just can't handle all of the interest payments and things that are going around. What does that mean for realtors? What does that mean for lenders out there?
Well, while we lead into that, I think we also need to point out that we are a society that for years and years and years, you go back to since 2012, we've seen appreciation with our homes with low interest rates. And a lot of people have lived their lives going, we can spend a little extra here. We can have a little extra credit card debt. We can do these extra things. We can have the bigger car payments, because what's going to happen is our house is going to appreciate in this number that we've figured out is like 15 to 20%, we think, every single year. And then what happens is we go, oh, well, we'll just refinance. We'll pull some of the cash out, pay off some of this life that we've been living, and we'll go back to living great. And we'll just keep going. And this little house is this cash machine for us that we're just going to have as this awesome little investment in the background. That necessarily isn't happening. Hasn't been happening for the last couple of years. You put a higher interest rate on top of it. There is a lot of people with the highest equity they've ever had sitting in homes. Oh, yeah. And this is where I think people are having to make this decision, Matt.
And I'll say, and to add on to that, the danger with that thinking too is because a lot of people are going to, as prices continue to go up too, people run into the issue is like, oh no, I have all this equity, but what can I really do with it? If I make a move, it's like, okay, I can use it, I can pull it out. And it's like, well, what kind of move do I need to make? Because if I'm just going from like my house to like the neighbor's house, like I got to move all the equity into that because it costs the same.
You're making some tougher decisions at this point in time. See, if you're at a place where you're like, I'm willing to refinance to pull some cash out so that I'm going to take a little higher interest rate, you're already at a place right now that I look back at like 2008, 2009, 2010, where I was watching people write checks for $50,000 or more instead of getting foreclosed on. Yeah. Like instead of saying, hey, let's just walk away from this house, like I need to have good credit. I need to be in good standing because I'm moving my family to a new place. We're going to have to bite the bullet and write a check for $50,000 to cover the difference of what our home cost, what our mortgage is to what the value of this house is. I got to go. We saw people do that. And I think we're in a place that we're coming into. I think this is just me kind of looking at all the facts of what I've seen after 20 years of doing this. There's a place in here that I'm watching where people are going, I'm now having to make a tough decision. I've got equity money built inside this house right now that we're sitting in. We need to pull some cash out to be able to make our life kind of come back to. Now, I do think there's some bigger things that need to be decided on here also, like changing kind of the pace of how we're living at. But if you're going to pull that money out, maybe we should move. And this is where, when you say, what does this mean to the realtors out there? What I've been saying to the people that I'm coaching is there's some very real conversations that are probably going to come up if you have built a database and a sphere of influence that trusts you, that knows that you're not just there for the sale. You're not just there to try to find another deal this year. If you're truly there as a trusted person in their world when it comes to real estate, there's some amazing conversations that will only come up if they trust you. They're not going to just sit there and say, we are financially a little bit like out of whack and I need to figure out, is it better if I pull money out and refinance or sell this place and we make a move and go get a different house and maybe change up our lifestyle a little bit? These are tough conversations that you don't have with a stranger you don't trust. You don't have it in an environment that is risky for you. And I think that the agents that I started to watch build a ton of business out of 2024, especially halfway to the end of 2024, Matt, and the ones that are going into 2025 that totally go against all the stupid memes that I'm seeing on Facebook right now that say, "Oh, there's no business. How do we have closings? What's going on?" These guys are blowing up their business right now, busier than they've ever been, telling me right now, like they have enough closings right now that are going to happen, not hopefully going to happen, are going to happen to have the biggest first quarter they've ever had in their business. These are people that have built an amazing amount of trust with their people, and their people are coming to them in these times and going, what can we do? So I brought this idea, Matt, about like this. Maybe do I refinance? Maybe we sell and we pull the money out as we're doing this. We change the house as well as changing the interest rate, make this big hurdle. I brought this up to somebody yesterday and they go like, just had that conversation with a friend of mine. They said that literally was the conversation I had yesterday. And I was like, okay, I've been thinking this for a while. That's the first time somebody said that was literally word for word the conversation I had with somebody. And that's what's led us to today having this conversation.
And I'll take that relationship side one step further too, Garrett. I feel like it's not just people wanting to, because I think sometimes if people are going to have an uncomfortable financial conversation, they will go to a complete stranger, somebody they know they'll never ever see again. Doesn't mean it's going to be the person they actually hire to help them do it. And on the other side of it is they will have that conversation with somebody they that's a horrible adverb to the word trust, but somebody that they trust very well, right?
Yep.
Not that they very trust, because that doesn't make sense.
It's very good trust.
It's that soft relationship. And I would even say the trust comes in the form of not just I trust you as a person, Garrett. It's that I trust you as my real estate advisor. That is the key there. And so I think the opportunity here is too, because all of this, whether it's refi or sell, comes down to numbers. And so do they believe that you know the numbers so that you can help them unpack their situation? So if you haven't been doing home equity reports, real estate reviews, whatever you want to call them, if you haven't been doing them, now is the time to really lean into them, because people really want to know the numbers. And this happens when markets move fast, which is what they have over the past several years. It gets very unclear. The algorithms cannot keep up as fast. The Zestimates aren't as accurate. And so people do want to understand this, and you have the data to help them unpack that. And that's what we need to start doing so that these conversations can come to you. Because the only way they'll come, Garrett, is if they feel that you are a trusted advisor for them that actually can help them solve the problem. If they think that you're a great realtor, that you can help them sell the house if they choose to do so, they're probably not going to come to you first with this conversation. They may come to you eventually to do the transaction if that's the thing, but don't we want to be involved earlier on so that we can really help guide these people?
Well, I think it's interesting as you're saying that, Matt, because there are certain people that when financial things come up, the first thing out of their mouth is, I need to talk to my financial planner. I need to talk to my financial advisor. I need to talk. So a lot of people have these trusted people in their world that they would go to, because for the most part, if you have somebody you trust, that's who you're going to go to. And I think that the opportunities there that a lot of realtors never insert themselves into being that person at that level, Matt, that when it comes to their real estate, Yeah, I actually agree with you. There's a lot of people that will go to a stranger that they'll never have to look at again because they can put all their dirty laundry on the table and be like, look, I don't have to have my friend know all this, stuff I've got going on in my life. You do prove a good point there. Like, I do believe that. At the same point, I think there's that space that if you can make them feel safe, and I said this word to a couple people this last week, like, you need to have a business and an expertise about you that makes people feel like they have a safe place they can come to, that they can say, hey, this is where I'm at. What do you recommend I do right now? And what can I make happen around this? Another element that I've been seeing kind of creep up that's been kind of making me go, we might be seeing this in the background a little bit. I've had more and more people, and this is in about the last 2 weeks, that are saying, I have people that are listing property with me right now, but they're really wanting to push the price. And when I ask them about why are you pushing the price, they don't say it that way, but why do you want to go to that level? The people are saying, we really need to get this much out of it. We really need to be at these numbers. And when I hear people talking like that, they're really, and again, it's come up from a lot of people. They're like, why are people pushing these prices so much right now? And that's another little element to me, that people are living in a space of their life that they are trying to figure out, look, where do I feel like I have money right now that I can get money out of? And gosh, if we can get a little bit more, let's get a little bit more. Instead of putting it on at 800, let's push it to 820. Just because it's $20,000 more. Why not? Let's do it. But they don't realize the damage and what can be caused there. And I've been hearing that kind of come up more and more from people that I'm coaching, where they're saying, like, I feel like people are just like trying to push these prices and it's not a good idea. That stuff tells me people are trying to find cash. They're trying to pull more money out of more areas.
And it makes sense looking at the debt numbers, Garrett, that we went over several episodes ago. And since then, they've climbed again. Like, it makes sense that people are looking for ways to consolidate, find more money. And naturally, when you look at, because like you compare the debt charts to the charts of how much equity people have, they're like opposites, right?
Yep.
It's like, oh, cool, look at how strong real estate is. We're not going to have another financial crisis because so many people own their homes free and clear. Look at the amount of positive equity that people have in their homes. It's like, well, they might start using that to take care of all this credit card stuff over here very, very soon and very quickly.
We need to be very clear about that, Matt. Is like, right now, I am not saying there's a housing crisis. I am not saying
no.
in
I'm
the
not even
housing
saying that this would
world,
create a housing crisis.
The housing industry, from what I'm watching, is like one of the healthiest I've seen in a very, very, very long time. We have people that have a ton of equity. We are potentially coming into a place of sellers that actually want to or need to sell. They are like, we need to change things up. We're going to put this thing on. We need to go. And we have buyers that are like, all right, I'll play with you. I like your house. I'll place an offer on it. And they're not raking them over the coals is what I'm watching right now. We have healthy buyers acting in a healthy way. We have healthy sellers, people that need to sell. They need a place to go to. And we have people with equity. Like, all in all, like, the housing market is in a really great place from what I'm watching. It's the lifestyle of some of the homeowners out there that are going to cause, I think, this real estate to start to unlock. People need to figure out how to get to that money because of their lifestyles and how we live. Now, I get it. I live in California. We might be a little bit of an anomaly where, we push it a little farther sometimes than the rest of the states out there. But I don't think we're that unique. I'm hearing it in more than just California marketplaces that people are doing that.
Yeah. And hey, if this isn't relevant in your marketplace, you don't think so, I would just look at your own. I mean, one way to understand like what are buyers and sellers going through out there is just think about yourself. Like what are you and your friends experiencing? Because that's probably the demographic of the buyers and sellers that you're also connected to. And so, sometimes we also shame ourselves for challenges that we're experiencing in our own world, Garrett, when it's like, we all share in those challenges. And from a mindset and even a spiritual perspective, like this is just money, like it's going to be okay. And that's the beauty of being able to show up and understand the numbers so that you can have really good, productive conversations with people because it is just money and we can create a solution and find a solution.
Before we end this episode, let's paint a doomsday picture for just for fun, Matt. Just for
fun. Let's burn it all down.
Just for fun. Let's burn this whole house down. So let's take what would be a really bad situation. A really bad situation would be people having this rising debt raising over their heads. They've got car payments, they've got credit card debt, they've got all this stuff that's raking up right now on one side of their life. And we go back to 2008, 2009, 2010, or just 2008, where we lost 60% of our value of our houses in 1 year. And we had people that were severely underwater. They had no cash in their house. They had no surplus they could pull from to be able to go, look, I can make this okay. I can right the ship. I can bring us to zero. I can get comfortable. If we were in that situation where I saw debt rising the way that it was, we got car payments out there that, I mean, I'm watching, Matt, you keep saying the car lots aren't piling up cars around you right now. I just drove by the Ford dealership. I can find you any Ford Bronco in any color you want with any trim package right down the road from me right now. They're
flying
all
out to
there,
California.
every single one of them. There are people that aren't buying those because, and I've been talking with some of my friends who are in those areas, and they're like, people's financial situations will not allow them to buy those cars right now. They are
cars
way
are just expensive too. I mean, the average car payment like a year ago was $700. It's probably higher than that now.
I just saw, and I'm not in the market right now for one of these trucks, but I just saw a Ford pickup truck for $120,000 sitting on the lot. Like, what do you do with that? Like, it's a Ford pickup truck at the end of the day. Like, it is a pickup truck. But like, if that is something that the average person's going, I need that, but it's sitting there right now.
It has GT3 money.
It is GT3 money. Jeez. Okay. So priorities. We have a priority problem. That's what we have. So I think like when you start, like, that would be a doomsday scenario.
Garrett, speaking of like the doomsday, like looking at I looked up some of the numbers here, and this is now probably almost 3/4 old, this data or whatnot, but home equity is somewhere around the 32 trillion mark, right? Lots of home equity, highest it's been, right? Consumer debt is at around the 18 trillion mark. Okay, they're not equal, but just imagine if everyone's like, hey, we could just wipe out all of our consumer debt by rolling it into that equity, right? And it's like, oh, now we just totally compressed the home equity side. But you eliminate consumer debt, you're just rolling it into a different mechanism. Banks probably wouldn't like that because that interest rate on that consumer debt is making them very wealthy.
And this is where it's like right now, though, we have a safety area. We have a place. If you're a homeowner out there, 9 times out of 10, you are sitting on enough equity to right the ship. And this is why I think this is going to become a thing that we might see is people are going, this credit card debt, this debt of the revolving debt right now is weighing horribly on my household, on my family, on my mental stress. I can eliminate it. I've got the money sitting in here. Let's pull it. That is what makes this actually okay and in actually a healthy situation because we can fix it. And I think we should all be grateful for that's the scenario that we're kind of sitting in right now because very easily, if we were to look back at 2008, 2009, that's what caused a lot of people to have to get foreclosed on. It's what caused wholesale house markets where you look down the street and the whole street had for sale signs on it. I remember it. I remember that moment where everybody was just like walking away from houses. I remember my friend sitting down with me going, what do I do? My neighbor's house just sold for $40,000 at auction and I owe $219,000 on a mortgage. Like, do I do the right thing and pay this thing off and like work it out because I made an agreement with the bank? Or do I bolt or live here without paying mortgage payments? Like those were real conversations I had with people back in 2008, 2009. You're not having to make those right now. Nobody's going to have to really truly make those actual decisions right now because the money is there. They can right the ship. They can make it okay. And I think you use a realtor out here right now. Understand that, be around your people, be there because you actually are the one that can help them with that piece that's going to right the ship for them. if they need to do that. And I think that's where a lot of real estate's going to happen. And it's what causes a lot of real estate to happen for years. We've just been in a different marketplace for years.
So I'd be curious, Garrett, what everybody else is thinking might be happening this year. So if you're watching on YouTube, drop in the comment below what you think is going to be going on. Do you think that we're on to something here? Do you think there's something else that's going on? And even just kind of outside of that, what do you think are going to be the major drivers for buyers and sellers of real estate this year? If you're listening on any of the audio platforms, shoot us a message, right? Shoot Garrett a message on Instagram, shoot me a message on Instagram, shoot Life at 10tenths a message on Instagram, shoot us an email at hello@life@10tenths.com. We're just curious what you guys are seeing and thinking out there as well. Because while we work with a lot of people, we have an incredible community inside our coaching program, which if you want to come join us, you can do that at life@10tenths.com. There's a lot more of you who are listening and watching. And so we would love to even get even more input from the thousands of you that are out there. So fill that in. And if you guys do want to level up your business this year, if you haven't gotten your business plan set up, don't worry. We got you covered because our business planning workshop exists forever until we do it again and refresh it inside our 11 Circle program, which you can get a 7-day free trial to over at life@10tenths.com. We would love to see you in there. That community is growing rapidly. Got some incredible people in there, Garrett, like the masterminds, the co-working sessions. They're so great.
I have had some of the best conversations with new people that are joining the community, Matt. Like I literally just connecting with them and long-term listeners. I have people that they're like, I've been listening to you guys since you guys started and now coming on this path and this journey with us. It's so much fun. Great people.
It really is. So guys, appreciate all of you for listening and tuning in. If you got value out of this, you think somebody else would get value out of it, give it a share over to them. The more people we have, that's how these podcasts grow. They grow by word of mouth. That's kind of the only mechanism that exists for these things to grow. So we appreciate you guys a ton for doing that. And we will catch you on the next one.
Thank you, everybody.